All right, welcome in everybody. Thanks for joining us on our last edition of the AI Circle for August. Big earnings day for a few very relevant companies. I know we'll touch on that tonight. But thank you for joining us. And as per usual, I'll just go through the agenda first while people are still hopping on. We're going to do a few announcements. I will remind you guys again about the ID verification pop up in case people still haven't done it. We'll go through our market update with Kelly, talk about earnings, some companies like NVIDIA, maybe even a little bit about the SPY. And then, as always, we'll spend the second half of this call just going over Q&A. What kind of questions do you guys have? How can we help you better to utilize the iFlip platform? And lastly, that Q&A portion is your gateway, I guess, to maybe being our Amazon gift card winner tonight. So with all of that being said, let's welcome in Mr. Kelly Korshak. Kelly, how are you doing?
I'm doing. Am I hanging in there or doing well? I guess I'm doing okay, folks. Nice to see everyone again. If I could see you out there in podcast land.
um, I will get to the disclosure here in a second. There was a question from Jonathan last week. I want to start with this just to make sure I don't forget it. Jonathan had asked basically, and sorry, this was a couple weeks ago, so I'm maybe not remembering the question perfectly, but something to the fact of basically having our AI manage things he wanted to or that he had bought manually. In short, not to spend 10 minutes on this, but you can actually customize a portfolio that theoretically could have one stock in it. Maybe it's NVIDIA and you only want the AI to manage that. Theoretically, you could do that, but you can also use the platform to buy and hold, buy and sell, whatever you want to call it, certain positions that you want to own outside of the smart folios. So most people come to us for the AI and kind of the do it for you nature, but that is an option as well. So knock that one out of the way. Before we get into any markets type stuff, read you our favorite part of this call. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instruments. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure the iFlip smart folios you select are suitable for your investment profile before trading in a live brokerage account. So, with all that being said, Kelly, I don't know if you want to jump into the markets, if you want to touch on NVIDIA's earnings or anything to start with, or maybe that's a portion of your market update. So, I'll let you
It
take it from
is.
here. We
Sure.
can turn your screen on and let you run.
Well, thank you, everyone. Yeah, let's start off with something that the market was anticipating this after the market closed today, which were the NVIDIA results. And the NVIDIA results are out. And if you could see closely on this live screen, the post market for NVIDIA is down $7. Um, earnings came out, for, earnings came out good, topped not expectations, but they were the greatest earnings they've ever had. They upgraded forecasts for even greater earnings in the third quarter. Third quarter, when they finally announced them, which is the end of next month. However, all that being said, the market is down $7, $7 on a 125 stock. It's a down, call it 5%. So, despite the good news, the market is not interpreting that as in all of their forecasts is anything good. The world seems to want more and more from earnings. And frankly, I think we're kind of coming into a time where they're going to get less and less of this. Here's one of the reasons why. Again, this will take the market down about the way it stands now. The Dow will be down about 200 points. The S&P will be down about 0.5% as it stands right now on the open if all things stay the same overnight. But something is happening out there that I think we should see. Let's go to the dollar. I think this is a story that kind of tells it all. The dollar has fallen apart. This is a huge move. The dollar has moved from a 106 all the way down to about 100. It's down at par. That's a 6% loss. Why? Of course, because of this. Interest rates. Interest rates have definitely moved up. The 10-year note is finally putting on a decent rally because now of all the 7 interest rate cuts that they thought that the market thought they were going to get this year, they're going to maybe get one in next month. So the big question now is it going to be 25 or 50? The eternal optimists are going to think that the Fed will move 50. And of course, the more rational bet is 25. And regardless of that, interest rates, remember this, control everything. All things are related to interest rates, including Bitcoin, the stock market, NVIDIA. It doesn't matter. All things are affected by rates. A thing that's going on here is if the dollar gets weaker, which is what I'm going to again show you that chart again. Remember what that means. That means that foreign investors that have US stocks, maybe their stock goes up, but guess what? When they sell them and get dollars back, the dollars are worth less than they were before. So then when they repatriate those dollars and turn them back into their euros or their yen or their Swiss francs, they're going to get less dollars. So whatever they make in the stock market is going to be overcome by the 6% loss that they just experienced in the dollar. And this is all a result of interest rates. This is the way money works. And so never feel that something is insensitive to interest rates. That's something you should all know. And the second thing is to know that what foreign investors are doing, and they have been pushing money into our markets. Remember that Japanese carry trade I mentioned 2 weeks ago that kind of unwound? Well, what do you think the Japanese yen would have done if what I said was right, which pretty much everybody knows was right? It was this. If we look at the yen, here's the dollar to the yen. This is the dollar getting weaker against the yen. There goes the carry trade. So what's happened is that now U.S. stocks are not looking as attractive to foreign investors. That means we're not going to get the excess capital from offshore to help buoy the prices of U.S. stocks. As we all know, the U.S. stock market did make a shot of running towards the lows about a month ago, only to be reminded how strong the money moves in this world. The Dow had lost, it moved down to almost even on the year, then put on a rally and made a new high just 2 days ago. Now it's backing off of this position. Notice this, that's the Dow, made a new high. The S&P almost there, but it didn't. But more importantly is the NASDAQ. NASDAQ definitely did not make a new high. This is not a new high compared before. They call that a divergence. It tells you that the market is getting discombobulated. They need to be able to all kind of make new highs at the same time. So the market optimists will always say there's room, much more room on the sidelines because all that money is in a money market and it's going to move into the stock market. The reason that money is in the money market is because it was earning 5% and still is. But if that changes, will that money come into the stock market? That's the question. The eternal optimists are always believing that it will because guess what? They feel there's nowhere else to go. And to an extent, they're right. However, we're now in a new case, a new scenario because of the dollar weakening. Maybe there are better places and people will be more discriminating as they go forward. The Mag 7, I think, is, I'll move over to the Mag 7. Mag 7, of course, had their rallies too. The markets came down, rallied right back up. This is called a V bottom. No new high for Apple. I think we made definitely, here's the move down. Look at Google. Where was the move up? Oh, it was this. But then it fell down again. Google is nowhere near a new high. Meta definitely made right to its old highs from here to there. Okay, could. Amazon, no new high. Microsoft, no new high. Netflix, new high. Made it. It made the move down, followed by a new high. Finally, NVIDIA, no new high. Again, it points out divergences. Doesn't mean the market's over, it's going down. It just shows you that it's now more of a picker's market. When this occurs, it just means things need to consolidate together and find out where the future direction of the market is. Seems like right now, maybe a little drift lower after such a large rally. Let's see how that unplays. The oil markets too, I mean, again, they're not really moving anywhere. There definitely seem to be a trend a little bit lower in the price of oil. This is a proxy for that. It's $74 a barrel is where we are today. I think it grinds around in here. And if there is any slowdowns, of course, oil prices will get cheaper. And that's helpful to certain kinds of costs, but we're not going to see that anytime soon, no matter what the price of oil is. ExxonMobil still kind of staying close to its highs. 116 is where it is. 122 was the high. To be $6 off the high, it's not going anywhere. So the things with strength are still hanging in there. Here's Energy Transfer, one we look at all the time, and it's still kind of close to its highs. Highs were around 1635, and we're at 1587. We're only 50 cents away from a high here. All Plains American, further off its highs. Excuse me, folks. Wish I had some water. But again, this stock again is paying such a huge dividend. Had earnings today, came out a little on the bad side, but they've maintained dividends under previous circumstances. So I'm not worried about this stock either. If I scroll down my list of things I'm looking at, JP Morgan, the bank stocks have actually done quite well since the spike down and then the spike up. JP Morgan hit a new high today. And I noticed Goldman right near its highs. And if I look at Bank of America, no, not so much. And that kind of goes hand in hand with what we think. We know Bank of America and Wells are not the money center bank JP Morgan or, of course, Goldman Sachs is. I look at here's a stock I think a lot of us might have seen. This is CrowdStrike. This is the company that does firewall protection for the largest corporations in America. And remember a few weeks ago when everything got shut down because literally the de-hacking software company got hacked. And it shut down all kinds of flight reservations to, but pretty much so many things in the country got affected. Many brokerage firms got affected because they got hacked. This is a stock, though, that I kind of look at as value. And so it's a stock that I like. I'd like to buy it. I expect pricing, post-market is now a little lower, probably. It was $10 higher. But this is a stock I'm kind of looking at to buy at some point, but we're not there yet. Here's a new company that I'm getting interested in. It's called LandBridge. We'll see what this turns into be. We'll see if this is of value to someone. It's a brand new company. Here's another thing I think is worth note: cruise lines. I kind of am warming up to the cruise lines just for a technical trade, and so I'm thinking again. I always think, is there a way I could put together a portfolio for value products? So this is something that I kind of like. I think we have chances to go higher on both Carnival Cruise Lines, Norwegian, RCL, which is Royal Caribbean. Some of these stocks I think have opportunities a little bit further to the upside. I'm not playing them. I'm just pointing them out. Here's some though that we have in our conservative portfolio: Verizon and AT&T. Let's take a quick. There's Verizon, and here's AT&T. Notice AT&T is looking good right in here. I mean, that's a nice looking steady rally higher for such a boring old stock, paying about 6.4% on the dividend. Verizon not doing as well, but again, also a 6.7% dividend on this stock. These are incredible dividends for telecommunications, and I think they would weather any storm that the market might have, should it have it, better than many other stocks, including oil. Because one thing is for sure, we still need our phones, and we still need internet. And these are the companies that provide it. and they're paying a good hefty dividend to boot. So these are stocks that, again, are in our conservative portfolio, as they should be, and they represent the interest rate component of our conservative portfolio. They also represent things that we could have in a 60-40 portfolio, but instead of the 60% the stocks and 40% bonds, we could put these kind of products in for the bond component, knowing that the correlations of these products are very similar to the bond, much more so than they are to stocks. So that's why 60-40 portfolios were developed in the first place. Finally, we should look at Bitcoin. Here, we'll look at it in the context of, let's look at it through this. This is the Global Bitcoin Trust. We used to use this a lot. We now replaced it with something called IBIT, this stock, which just announced in the end of January that it was going to go public, and they launched the product. But for a longer term view, we have more data on this. This is Bitcoin. They always say that Bitcoin doesn't do well in the summer. Okay, I guess it seems to be true again this summer. Summer is coming to a close as we go into Labor Day next Monday. Happy Labor Day, everyone. I'm, of course, still a believer in Bitcoin and its proxies. Obviously, this is what they call a big pennant. Let's get the whole context. The main rally, the huge lull for a couple of years, and then another new rally to new highs. Now we're falling back to what used to be the old highs here and seeing where the market goes from here. Again, my belief is this is a long-term hold and a trading opportunity. That's why we have the iFlip portfolio, which, by the way, right now only owns 50% of Bitcoin, and the other 50% of its money is looking for the next trade. And by the way, that next trade only will occur is if there's some kind of momentum in this particular product, Bitcoin. In other words, we will buy this product on momentum because it's a totally momentum driven, and we will sell on any kind of relaxation off of momentum. This is something that we're not in most of the time, but when we are in, we're generally in there for short periods of time. It's a great little hedge against a completely long portfolio of Bitcoin. I will remind everyone that when Bitcoin did have this move, this large move lower recently, that we didn't lose all of this money. We lost half of it because only half of it was invested. It's very difficult for a market like this to put on a trade with the other 50% of the money. So I'm pretty happy about this performance of this product. Beyond that, Lee, I think this covers the basic market update for the last couple of weeks. We should go into Q&A.
Yeah, and just because, not that everything you said was about earnings, but because of NVIDIA, CrowdStrike, some others, maybe just briefly talk about, I used to get the question a lot, I don't as much anymore, but how the AI factors in earnings, or is it something that we care about type thing? I know your stance on it, but feel free for those that don't know it. Give them some of your thoughts.
The real thought on this is the science of the markets is completely different than the factorization of the market. And what do I mean by factorization? Many people believe that fundamental analysis is all that's really important. Fundamentals drive stocks. We've heard this probably our whole lives. I had a person that I was very familiar with at my graduate school, even though I wasn't part of his program. He was a professor named Eugene Fama. He won a Nobel Prize for economics. And he was the person that got together and wrote a book called A Random Walk Down Wall Street. And what he pointed out was that all information is always in the market. Now think about that. That was the early 90s. That means that if you want to know what's in the market, just look at the price of the stock. When earnings come out, like they did today, and we saw NVIDIA, which is now down more than $8, the earnings came out, and that's effective. What were we able to do on that earnings report? What could the AI have done when it doesn't know what the earnings is going to be, at 3:59, and then at 4 o'clock Eastern, the earnings come out. There's no way the AI can react and say, let's get out right now, 1 second afterwards. There are products out there that if you watch this, you'll see there's no volume, nobody's trading. They're just recreating a bid. And so there's no way the AI is going to interpret those numbers, those earnings. Or by the way, any forecast that could come randomly from management from any large company. But what AI can do is it can look at the number of series of earnings reports and decipher, see if there's any kind of information that's in the current price that's related to the earnings that it might be able to glean to say, hey, because of the way the product has been reacting to earnings, maybe we should be out of that market right before the earnings report. And right now, I could tell you, if that was the case, I would see more trades occurring as a result of the AI right before earnings, and I don't see that, which means the underlying algorithm is not really looking at that fundamental data in the way we think we might want to do it. Like, hey, is it going to change the dividend? That's fundamental. What are the earnings going to be? That's fundamental. What information, along with other information, can we glean to be able to predict future price? And right now, it doesn't do that. But what it does do is, again, in its totality, it does learn. That's why it's called AI. It learns.
Sure.
It just doesn't learn when I teach it. I teach it, and then it teaches itself after that. And so, pardon my gesticulations, after that. So here's the quick and short answer is all information is in the price. The AI can't possibly predict what the earnings numbers are going to be tomorrow, but they can hopefully learn and decipher patterns from previous earnings reports and price.
Perfect. A couple of questions that leading me to believe these people think you're a fortune teller, which you never know, you might be. I'll start with one from Otgon. She's got a couple. You were talking about NVIDIA. She asked if you thought it was a good time to buy NVIDIA, and then she also said, I might have missed it. Will NVIDIA go down more, or what's your forecast on it, basically?
Look, one thing NVIDIA doesn't have, and maybe the closest thing, is called competition. Right now, the NVIDIA chip, which were found in our video cards for years prior to NVIDIA becoming what it is, essentially one of the largest companies in America, they don't really have competition. The closest thing I think is AMD, which we might want to take a look at. And so to answer that question thoroughly, this is AMD. I mean, I remember when the stock was 50, but if this is the closest competition, this chart doesn't look anything like NVIDIA. However, in the future, NVIDIA will get competition. Just look at Intel. Remember many years ago, Intel used to be in the i6, i5, i3s, in 386s, all of those computer chips that we saw historically. And Intel now is a broken company. It's a completely broken company. AMD is a good company, but it doesn't quite have the technology yet to compete with NVIDIA. So if I had to answer you, Otkan, in this case, I'm not sanguine at NVIDIA at this price, and here's why. Right now, its market cap is pretty much the same as Microsoft and Apple, that took 20 years to get it. And here's a company that comes along as a brand newbie, and it all of a sudden says, I've got the muscles of Microsoft and Apple. I'm going to bet against that one in the short run. I'm not going to short this stock. I wouldn't buy puts, but I could tell you that I think this stock can be found significantly cheaper. And I don't know what that price is, but I am not a buyer of this stock other than whatever the machine learning, AI, algorithm side of our company does. That's one thing, but that will manage it. through the risk management techniques we use. It's profits or losses. But if it was me and there was no AI, no algorithm, no nothing, I think there's better things to buy.
Perfect. Jim asked about a dividend portfolio or smartfolio. I know we've talked maybe in different avenues about dividend portfolios. Go ahead, take it from there.
Well, the closest thing we have right now, of course, is red oil. Red oil is all oil companies yielding dividends. The conservative is the next thing. All the things in the conservative portfolio also yield dividends. You might want to take a good look at the conservative portfolio, because when people think of a conservative portfolio, like, okay, hey, I don't want to take a lot of price risk. I rather just try to get some kind of income out of this. That's what conservative means. Let me draw the income, but don't give me a lot of price risk like I have with NVIDIA. I could build a dividend portfolio that essentially was a conglomeration of the conservative portfolio and red oil. And there's a few other players in there as well. I have thought about just creating something that said dividend, just like it says aggressive, and saying, hey, this will be our dividend portfolio. And it would essentially be just a collection of those other two smartfolios. So a workaround, if you wanted to do it now, is I'd buy some red oil and some conservative, because you know one thing, everything in there is paying something.
Right.
And so that would be my approach if I just didn't put it all under one click. Now you have to use 2 clicks. 1 click to buy red oil and another click to buy conservative.
Perfect. Question from Brian. Brian, I'll give you a short answer, but right now there's not. It's coming soon. So he's got some custom portfolios that he was messing around with, and he just wants to delete them. They're working on that. I couldn't give you an exact ETA, but you will be able to clean up your dashboard soon and not have to look at all your sandbox type portfolios. One more just came in from Steven. There might be a couple parts to this question. So is each smartfolio fixed, or can they be modified to an individual's choice? Let's start with it. And this, maybe I'm taking it out of context, but are the smartfolios fixed, Kelly? Like, do things ever change?
Yes, they do. I mean, so for example, in the conservative portfolio, at one time we only had AT&T, but earlier this year we said, you know what, we're not going to give say 7 or 8% to AT&T. We're going to do that 5% to 4% to Verizon and 5% to AT&T. So we took some away from AT&T and added Verizon. We also added a little bit of the Bitcoin to all 3 portfolios, very small amounts, only 1% to the conservative, 2% to balanced, and it might be 3%, I think, into the aggressive, because you see ways to smooth the performance of these things. And so these are smoothers, very similar to adding bonds to a portfolio. At least that's what we used to be able to do. But yes, they are not fixed, and they will change periodically, and they're changed by a review of the performance and the review of small changes to see which would be better going forward. So yes, the answer is no, they are not fixed. There's another question there. I think AI is learning slowly.
Yeah, 1 second on the
go ahead.
Steven. So the example I used to give, like say the Mag 7, say that big tech portfolio, maybe you like everything in that portfolio, but not to pick on anyone, but say for some reason you hate Meta, so you don't want that in your portfolio. Technically, you could customize that portfolio to have the other 6 things in it and just take out Meta. So you can kind of modify it towards whatever you want it to be, and kind of use ours as a model, for lack of a better word. But so take that all for what it's worth.
No, you're right. That was essentially the second part of that question. Yeah, you could create a custom portfolio and put the same things that we have in one of ours, and then add a few other things.
Or maybe you wanted more NVIDIA or something.
Yes,
you could 30%.
Yes, you can change in mix and match.
Perfect.
So that's the answer there, and that there is a way.
The question you were getting at, seems the AI is slowly learning with me. How long do you think it'll take for the AI to start making stronger decisions like the spider buy? I just want to clarify first before you answer this that don't expect that to happen every single time where the AI buys the spy at the exact bottom and it goes up 12% or 10% from there. Like that, you got to take credit when things work out like you want them to, but we've never claimed to buy at the exact bottom or sell at the exact top. And it's going to, maybe you'll get lucky for lack of a better word sometimes, but go ahead, Kelly.
It's an interesting question about how AI learns. Since we apply our machine learning and teach it on historic data, because that is valid data. I mean, prices were where they were historically. The way AI learns is kind of a back and fill approach. It's a little bit complicated to explain that you look ahead and then you look ahead a certain amount of time and then you fall back and try to rebuild it through AI backwards. In other words, I look ahead, but then I go back and say, okay, this is what I learned from in the previous time. And now I'm going to take that and look ahead and see how would that have worked going forward and try it again and again and see if we can find better outcomes. The way I train it is the way it would determine how much time it takes to really learn and create new data points inside of its own structure, which, by the way, are obscure to me. We don't know the internal structure, for example, of a Bayesian algorithm. We know there's white papers that tell us what's in there, which is essentially a bunch of bins of things that the AI picks out and measures the data you give it in it against each other. But I can tell you this, I look at things quarter by quarter. So I am training on a 90-day basis. And then I march forward 90 days on historical data. And then that's how it learns. But every 15 days that we move forward, a training actually is occurring internal to the AI, which means that technically inside it's adding to the bins, the frequency bins inside of the Bayesian algorithm that we use every 15 days. But if you think about it, the larger those bins get with data, the more accurate they become, right? So look at the number 15 days as a data point. Think of that as one flip of the coin. Now we know that if we flip a coin 10 times, we can expect that we should get 5 heads and 5 tails, but we all know what the reality is. It's going to be something different, more likely. It could be 8 heads and 2 tails, or vice versa. If I flip it 1,000 times, if it's a fair coin, it better not be 800 heads. What I'm getting at, if you can understand this, and again, we're in a complex spot here. What I'm getting at is that the more it has, the more accurate it becomes. And every data point is 15 days. So that's essentially just one data point because of just the way I'm reading it. I could read it as every 20 days or 10 days, but 15 days is just kind of like a standard. Why? It basically represents half of, 15 days represents close to 2/3 of a month. There's 22 trading days in a month. And so I don't want to give it a whole month's of data, but 2/3 of it is the way I do it, because that's the way it was kind of initially presented to me. And other ways of doing it are less meaningful from what we tried to decipher. I would suspect, though, that over the next couple of years, we'll become even far more accurate than we are now. And I think the signals will increase with validity as time marches on, and time does march on. And
it does.
It will happen before we die, but I can't tell you that, yes, every 15 days to right now is the way we set things as a data point. So the bins get an extra piece of data every 15 days. And right now, the historical review is 250 days. I'm thinking mathematically. Sorry, I have way too complex a question. That's a real winning question, really, because you're getting into things where this is now a white paper discussion.
Sure. And
I think the rest of the people here are going to get that from the way I would like to answer you.
Sure. The only thing I would add is, keep in mind, we're using our AI to manage risk. We want to make sure your money's not invested when you're losing 20% like 2022, where it would in a buy and hold everywhere else. So while it's great that the AI can occasionally make a trade where it gets into the SPY at the perfect time, like in reality, you might use the platform for 6 months and we might just be plugging along just like the market. And that doesn't mean that the AI is doing a bad job. It's just there's no trade for it to make. So I have one other pre-submitted question. I'll just take a last call for questions so we don't keep Kelly here for an hour. Let me just double check. Otgon also asked about CrowdStrike. I believe you were saying it wouldn't be something you were looking at buying right now, but maybe in the future, depending on where things went. Is that a fair assessment?
Yeah, it's definitely a fair assessment. I like this. I think the stock has meaning. I don't think all contracts will be canceled. I just think that if we buy the product in here or a little lower, I think you'll probably be happy sometime before the end of the year. It feels strong to me, even though of what just recently happened. I'm watching it closely. I do own some in disclosure personally, but believe me, I'm watching it like a hawk. So let me put it real quick up so we can all see it. Here's the way you would trade this, by the way. If anybody looks at a trade, you would buy it at 264. You have to risk the lows of 200. That's $64 from 264. That's about a 20% risk before you know you're probably wrong. But what's the upside on this? Well, the upside clearly could be back to the highs. So assume the highs are not the old highs, but something closer to what a 2 standard deviation move would be at that time, which now curled lower because of the extent of this move. There is a chance to go to probably in the future around call it 360. So I can make basically about $100 and I could lose 60. So basically 10 to 6, 5 to 4 odds, not bad. That's why I would love to buy this thing if I could. It's at 254 in the post market. I'd like to buy this at 240 and risk the $40. I would love that. That would make me feel, warm and fuzzy about risk and reward.
Perfect.
That's, by the way a professional would look at that if he didn't know anything else.
Perfect. Let me see if there was a last one. Okay, it's just commentary. Kelly, this one's very broad, so take it wherever your mind is thinking. But this was at the end of the last AI circle. This person basically said, in your opinion, using the the iFlip platform, like what's a good recipe for success? Not necessarily saying pick these portfolios, but what would you say contributes to not only a good user experience, and you could even generalize it to investing in general. What's a good recipe for success for someone?
Well, when I hear that question in its broad term, the best recipe for success is to love and to learn. But if I'm going to go beyond that and apply that to the stock market or wealth, to build wealth, success, I think, comes mostly from persistence. You persistence in understanding that this is a business and it's not a game. And if it's a business, you have to treat it that way, which means you have to study. You have to continue to study, which is learning. Hopefully you can find a passion in it, because if you have passion for something, it's a whole lot easier to learn. But at the end of the day, what I've found that were the people that had the greatest success are the people that are just steady at what they do in this business. In other words, they find the thing that works for them and they repeat it. Something we've all heard before. So you have to repeat what you found to be successful. For me, it's always been kind of value buying. In other words, I am the buyer of the CrowdStrike products, things that have gone down because they had hard times, and it seems dislocated to what the company might really be. So I love to buy things that have gone down hard in price. You evaluate them and then buy them. That's what's been worked for me. What's worked for others is say, look, I always want to be in the direction of movement. And if the market's going up, they buy it. They don't care about what it is that they're buying. They just want to buy it because it's going up. But ultimately, it really does boil down to persistence and further education.
And I would equate that to more specifically like how you use our platform, persistence in being, say it's a retirement account, make your contributions, add, go ahead.
That's true. And again, in the context of using Flip, I think the best way, if it was me, and it is me, I would pick not any one portfolio. I'd pick 3, and I would stay with them for at least an entire year before you reevaluate. Never chase returns. Yep. Never do that. If you chase them, you will not get them. We never find the carrot is never given to the horse. It's just the horse is chasing it. But we're hopefully a lot smarter than the horse. And so the way I would do it is I would pick 3 portfolios. You could pick aggressive, balanced, and conservative, do 33% of each, hold them for a year and see which one did best. And you would expect the aggressive to do best, but do it that way. A year later, reevaluate. Maybe the year after could be red oil, balanced, and SPY plus. Yeah. You don't know, but don't chase something, oh, I bought the thing, it went down 7%. I don't want this anymore. You can't think that way. You just cannot. One market day can move your account, 5, 6, 7%. It's possible.
Right.
Unlikely on our platform, but it is possible.
Yeah. No, just based on what you said, what I've seen, and the people that are the most frustrated or have honestly the worst success are the ones that play with their portfolio all the time and change, I'm going to go from aggressive to balanced this week and then back to aggressive. And again, I've always been of the belief, and this could not be totally true, but in any investment, regardless of what the asset class is, like, time is the most important thing. You can compound your money, and in IRA's sake, you can keep contributing to it. Just you gotta, slow and steady is kind of a cliche, but it can be powerful. I didn't see any others thus far, so I think we're gonna wrap it up there. Where was, it was over here. I'll get rid of that. So our next AI circle is going to be on the 11th. So we're off next week, and then the week back, we'll be back here at the normal time. Like Kelly had mentioned earlier, have a great Labor Day. And Kelly, if you have any final thoughts, feel free to send us on our way.
I'll say the best question. You want me to do that?
Or you're right. I didn't even.
You forgot about that?
Yeah. I guess naturally said there's no winners. Thank you, Kelly. Who's our winner? Sorry, guys.
I'm looking for the one. The technical question is the one that is the hardest to answer. I think the one that should be is the question about, can I use the AI on a manually purchased stocks? That you kind of answered. That's the right question, and that should be the winner. If you buy a stock manually, and like Lee mentioned earlier, if you buy a stock manually, you can't. But you could buy a stock by create a personal smartfolio for yourself. Yeah. Put that stock in it, and then it will be managed by it. So that is possible. And it's a good question, because that question has been asked in one way or the other by many others. That's the winner.
It was the pre-submitted one.
It was the pre-submitted one.
That's a first in iFlip AI Circle history. So, Jonathan, I don't even know if you're on today, but if you watch the replay, Well, I think we're gonna have to make up a rule here. I'll give you a week. How about that? Reach out to us, show us your account number. I'll put the directions on the screen in case you're watching this as a recording. But you're our winner because of your question 2 weeks ago. That's a new one, like I already said. But send us over your account information to mailbag@iflipinvest.com, and our team will basically tell you how to redeem your winnings. Go
And for
ahead,
me to sign off, I just want to be able to say hi to a few people. Danny Martin, thank you for
please.
joining. I don't see you often on here. Otkan, always nice to hear from you. Jim Tag, thank you. Sherry Bahar, thank you for a nice little short chat today. Again, all of you, all the best. Happy Labor Day.
Awesome. Yeah. Sherry, welcome in for your first time, and ditto to everything Kelly already said about the usual suspects. So have a great rest of your week, everyone. We will see you back here in a couple weeks, and enjoy the